Hello students, Assalamu alaikum. Today we are going to discuss A-level accounts paper 12 AS. So here is your paper. Okay, this is your paper. May June 2023, paper 12. It's a 1 hour paper having 30 MCQs. So see what's happening in MCQs. Okay. Now, which now correctly describes an advantage and a disadvantage of partnership? Okay. A and C option can't be the uh, advantage of A and this option. Uh, they can't be this A or A can't be the advantage of partnership because limited liability can't be the advantage of partnership. Okay, like this A and C. These options are useless. Okay, now come to B or D. Access to more expertise and unlimited liability is a disadvantage. Yes, this must be the answer. What about infinite lifetime of business? No, partnership do not have partnership business does not have what we call perpetual existence. So this is not the advantage. So D option could not be the answer. Getting my point clear? This could not be the answer, D option. So it means lastly we have only one thing left, which is uh, B option. So B option is the answer. Yes, B option is the answer. Getting my point clear? B option is the answer. Okay. Now, next item. Okay. Okay. Now come to second option, second MCQ. An asset is purchased on credit by a business. What is the effect of this transaction on accounting equation? Okay. When asset, when we buy any asset on credit, asset increases. Okay. Liabilities are also increased. And it has no effect on, so D option is going to be the answer. This transaction is not going to affect capital. So it means D option should be the answer. Okay. Now come to item number 3. Okay. When we buy any asset, again I'm repeating answer number 2. When we buy an asset on credit, the asset is increased, the liabilities are also increased, but it has no effect on capital. Now come to the uh, which item are relating to new manufacturing equipment are capital expenditure. Capital expenditure, there are so many definitions available on capital expenditure, but I must tell you one thing. Capital expenditure, a very key point that we have to incur it once. Okay, all capital expenditures we incur once. Getting my point clear? This is the most important thing about capital expenditure. So, cost of equipment, yes, it is capital expenditure, and delivery cost of equipment, yes, it is also capital expenditure. Okay. What about staff training cost? Staff training cost is not capital expenditure because we can do it, or we sometimes we need to do it several times. It's a revenue expenditure basically. So A option should be the answer. A option is the answer. Okay. Now come to number 4. Okay. The financial year of a business ends on 31st December. At the beginning of the financial year, the following payments were made in respect of raw machine, of a new machine. Purchase cost 60,000, installation cost 10,000. Both are capital expenditures. It was discovered that the installation cost has been incorrectly treated as an expense. It is a policy of the business to depreciate machinery at 20% per annum using the straight line method. What was the effect of this error on the profit for the year ended 31st December 2021? Okay. Now, what we have to do actually, the answer is C. First, we have deducted 10,000 from the profit. We have to add back that 10,000 into the profit. But again, the depreciation of this installation cost, because it should be included in the cost, is not done. So 20% of this 10,000 is 2,000 would be the depreciation or would have been the depreciation if it had been charged to uh, cost of asset. If 10,000 had been charged to asset, it would have been depreciated by 2,000 this installation cost. So it means our profit is 8,000 understated. This is the answer. Okay. The motor vehicles cost account had a balance of 90,000 in the beginning year on 1st January. On 1st September in the same year, the following transaction took place. A motor vehicle was disposed of. The vehicle had been purchased in the previous year for 21,000. A new motor vehicle was purchased at a cost of 24,000. Depreciation is calculated at 20% using the straight line method. Depreciation is charged on a month-to-month basis for each month the motor vehicle owned. What was the depreciation charge for the year ended 31st December? Now, first what we have to do, old asset which cost 90,000, we have to deduct 21,000 out of that. It makes 69,000. Okay. So here, uh, here we have 90,000 minus 21,000. First step, 21,000 is equal to 90,000, 69,000. Okay, 69,000. So what we have to do, we have to take depreciation of this asset which is left with us 20%. Okay. So, okay, 20%. So answer would be 69,000 multiplied by 20%. Answer is 13,800. 13,800 is the answer. Okay. This is depreciation of the asset which exists already we have. Okay. Now 21,000, that asset was sold on uh, which date? That asset was sold on 1st September. So we have to include in this year 8 months depreciation: January, February, March, April, May, June, July, August. 1st September we have sold, so we have to add 8 months depreciation of this uh, motor vehicle uh, which has been sold. It had cost 21,000 multiplied by 20%, 20%, and that would be how much? 21,000 multiplied by 20%, 4,200 multiplied by, sorry, divided by 12, multiplied by 8. Okay. Multiplied by 8 upon 12. 8 upon 12. So the answer would be how much? 2,800. 2,800. Okay. And the new motor vehicle that was purchased for 24,000 multiplied by 20%. But it was used for only 4 months this year. So 4 upon 12. That would, so 24,000 multiplied by 20% divided by 12 multiplied by 4. 1,600. 1,600. So how much depreciation we have calculated? 30,800 for the old one 2,800 for the machine which has been sold, and 1,600 for the new machine. So that makes 18,200. So it means this is your answer. 18,200 is your answer. B option. This is the answer. Getting my point clear? This is the answer. Okay. Come to number 6. And which error would not affect the agreement of the totals of a trial balance? A credit note of $56 received from supplier was entered in the books of prime entry as 65. This is error of transposition. Error of transposition does not affect the trial balance. Oh, it means A option is going to be the answer. Yes, this is our answer. A option. Because it is error not affecting trial balance. Okay? Okay. A trial balance did not agree and the bookkeeper found the following errors. A bank overdraft of $100 had been shown as a debit in the trial balance. A cash purchase of $160 had been entered in the purchase account as $150. The purchase was entered correctly in the cash account. A telephone invoice of $400 had been debited to insurance account. Do you know, class? Do you know, students? This is this error has nothing to do with the trial balance because it is error of principle. Are you getting my point clear? This is an error of principle. Okay. So we are not going to discuss this here. Okay. Now, when we rectify bank overdraft usually has a credit balance. So if we have debited bank overdraft, it means we have to debit suspense account by 200. Getting my point clear? Okay. We have to make it by 200. So, okay. What we have to do, we are going to make a T account over here. Okay. Please don't laugh at my T account. Okay. I'm not good at drawings. Getting my point clear? Okay. This is suspense account. Okay. Now, this is our suspense account. I'm giving it, nobody's going to laugh on my drawings. This is suspense account. Okay. Now, if we have to create overdraft, it means we have to debit suspense account here by 200, and the reason is overdraft. Overdraft. Okay. 200. Now, a cash purchase of $160 had been entered in the purchase account 150. The purchase was entered correctly. Now, the purchase was correctly entered cash book. So purchase is going to be debited and suspense is going to be credited for this amount. This is $10. Okay. Reason? Oh, I have to delete it. I have to do it again. Purchases $10. Okay. So it means here must be, if we have an opening balance brought down of suspense must be how much? $190. Okay. So A option is going to be the answer. Getting my point clear? So our answer is A option. This is our answer. Okay. Okay. I'm not good at drawings. Okay. Now, a bank statement shows a credit balance of 8,360. Comparison with the cash book reveals bank charges 124 have not been entered in the cash book. Checks received from customers for 16/2023 have not been credited by the bank. Checks sent to suppliers for 18/7/25 have not been presented. What is the correct cash book balance? Okay. Now, if they ask you, okay, what is the balance shown on the cash book? The answer is different. See, 8,360 bank balance. Okay. Plus bank charges 124. check received from customers, uncredited deposits should be added 16,223, and uncredited checks, unpresented checks is going to be deducted 18,725. So if they ask you, okay, what is the balance at the cash book is shown is 5,982. But the question is, what is the correct cash book balance? So what we have to do, we have to subtract 124 again as a bank charges. So 5858 debit balance is the answer. So this is our answer. Answer C. C option is the answer. Because they've asked you the correct balance of cash book. Getting my point clear? Okay. Now, which statements are benefits of control accounts? Okay. Uh, they check the numerical accuracy of the ledgers. Yes, this is the case. Yes. Okay. They help to identify missing entries in the book of prime entries. No, it has nothing to do with that. Sorry. Okay. Now, what about they provide details of individual transactions? No, they do not provide any sort of details. Okay. They provide information for financial statements quickly. Yes. So 1 and 4 is your answer. So it means B option is your answer. Okay. Move further. Okay. A company has obtained the following information for the year ended 31st December. What was Acha, okay. Opening balance of sales agent control account, closing balance of sales agent control account is discount allowed, credit sales. What was the amount received from credit customers? Okay. Now, what are the debit items on control accounts? 31,000 opening balance plus sales 1,25,400. These are the debit items. Now deduct credit items. Closing balance 35,000. Discounts 2,300. So it means 119,100 we have received from our customer. So option A is the answer. Yes, option A is the answer. Okay. Which statement contains the correct accounting treatment for accrued income? Accrued income means income incurred, income earned but not yet received. Income earned but not yet received. Added to income, yes. And shows as a current asset, yes. A option should be the answer. Okay. Now come to 12. A business received rent from letting part of its premises. On January 1st, 20, there was a balance brought forward of 1,000 in the rent receivable account in respect of 1 month's rent received in advance. During the year ended 31st December 2022, the business received the further amounts totaling 13,000 to cover the period from 1st February 2022 to 31st January 2023. Okay. Rent increase of 10% was introduced in 1st April 2022. Okay. Uh, the statement of profit or loss for the year ended 31st December 2022 incorrectly included an amount of 13,000 of rent receivable. So, what was the effect of this error on the profit for the year? Acha, in this case, what happened? See, uh, take the test. Uh, I'm taking the text here. January. Rent for January is received in advance. That is 1,000 as prepaid. We have dollar 1,000. Okay. February rent is 1,000. Okay. March rent is 1,000. Okay. April rent is going to be increased by 10%. So it must be 1,100. Okay. Now, May, from May till December also, like April, will get the rent as 1,100 multiply by May, June, July, August, September, October, November, December, 8 months. So that would be 8,800. Okay. Now see, 8,800 from May to December. Acha, plus April 1,100 plus 3,000 from January to Feb. That makes your total rent income 12,900. Getting my point clear? So if we are adding 13,000, it means our profit is overstated by $100. Getting my point clear? Okay. Now move. A sole trader's personal expense had been paid out of the business bank account and included in the statement of profit loss. What was the effect of this on the profit for the year and on capital? Okay. Number 13. Okay. If we are paying any expense, there are two items going to be affected. One is expense and the other is cash, not capital. So C option is going to be the answer. So that expense is going to reduce the profit, not the capital. Okay. Okay. Now for this, what happens? See, a business gross profit margin of 25%, sales revenue is 200,000, opening inventory is and closing inventories are given. We are asked to know the amount of purchase. So first we have to first we have to calculate what is the cost of sales. So cost of sales would be 200,000 multiplied by 75%. If 25% is profit, it means 75% is cost. So 200,000 multiplied by 75% means 150,000 is your cost of sales. So 150,000 cost of sales plus closing inventory 5,000 minus opening inventory 10,000. So purchase is 145,000. It means B option is our answer. Okay. Now come to 15. A partnership maintains separate capital accounts and current accounts. Okay. Okay. Which statement? The capital account represents the retained earning of the business? No, it can't be. Okay. The capital account show the total amount owed to each partner. No, because what business owed to partners current account also. The capital accounts and current accounts equal to net asset. अब यही तो एक रह गया. Only one left. So D option is going to be the answer. Okay. Now come to 16. X, Y, and Z are in partnership sharing profit and losses in the ratio 2 to 1. Okay. X is allowed an annual salary of $10,000. Y has made a loan to partnership on which partnership pays interest $5,000. Profit for the year before appropriation was 150,000. What was the Z's total share for the profit? Okay. So Z's total share for the profit must be how much? Uh, total profit before appropriation is 1,50,000 minus 10,000 salary. So residual profit is 140,000 divided by 5. Oh, sorry. Means 28,000 is going to be the share of Z. Okay. This is the answer. This statement has nothing to do with this question. Okay. Okay. A company has sufficient balance in cash of the sharing premium, journalism, and retained earnings account to issue bonus shares. During the year, bonus shares were issued. The directors there keep the reserve in their most flexible. Which ledger account will be debited on the issue of bonus shares? Yes, share premium. Oh my God. Yes, share premium. If we are giving bonus shares. A very simple question. Very simple question. Okay. Now come to 18. Okay. Oh, 18 question. We have to be very much careful. A very lengthy question. X Limited had the following equity on 1st January. Ordinary share capital 400,000. Ordinary shares of $1 each. That makes ordinary share capital $400,000. Share premium 30,000. General reserve 10,000. Retained earnings 70,000. Okay. Now, a bonus share, a bonus issue of ordinary shares for every 8 ordinary shares. One ordinary share for 8. Okay. It is the company's policy to keep its reserve in the most flexible form. So if we have number of shares 400,000 divided by 8, it means we have issued 50,000 ordinary shares of $1 each as bonus. So what we do, we are going to add over here in the capital, how much? $50,000. Capital will be increased by $50,000 for bonus issue, and that 50,000 we have to pay from share premium. We can only pay 30,000. Okay. And the remaining 20,000 we will pay from the retained earnings, 20,000. Got it? This is how. Uh, oh, I have to make minus. Okay. Now, this is a situation which is setting the. This is the situation which is setting the equation. Okay. Now, 1st July we issue a debenture. A debenture. Okay. ठीक है. On 1st December, a right issue of ordinary shares for every 15 ordinary shares at a price of $1.6 per share. The right issue was fully taken up. Now, in this situation, what we have to do, we have to, we have now share capital 450,000 divided by 15. It means we have issued more 30,000 shares. Okay. So the here share capital is again going to be added by 30,000 plus 30,000. Okay. Now, but again we have increased our share premium. Share premium is also increased by here. How much? 30,000 multiplied by 0.6. That is 18,000. Okay. I think I should deduct it over here and I should include this 50,000. So we will be having a more comprehensive picture. Okay. Okay. See, now share premium was supposed to be decreased by 50,000 for the bonus issue, and it has increased by 18,000 just because of new premium. Okay. Profit for the year 120,000. Now C class. Here 70,000 is retained earning plus profit 120,000. Okay. Minus 2,000, which is short in short here. Because here share premium is 30,000 plus 18,000, 48 minus 50 means here we are short of minus 2,000. That minus 2,000 is going to be settled through retained earnings. So, what we have to do now, we have to calculate total shareholder equity. So, how to calculate total shareholder equity now? 480,000 is our share capital. Okay. 10,000 is our general reserve. Okay. 70,000 plus 120,000 minus 2,000. 188,000 is our retained earning. So 678,000 is going to be our total shareholders equity. Debentures has nothing to do with it. So it means A option is going to be the answer. Draw. Yes, this is the answer. Okay. Okay. We have nothing to do with this debentures, I think. It has nothing to do with this question. Okay. Which three key users of financial statement will be most interested in the statement of profit and loss? Means income statement. A statement of profit and loss means income statement. I think employees, environmental bodies, government, no. Public, no. B and C options are useless because public are not interested, not most interested. These are useless. These two options are useless. Okay. Shareholders, government, and potential investors. Here, environmental body is least interested. So it means D option should be the answer. Getting my point clear? Okay. Raj, a supplier of goods, has calculated the following ratio from the financial statement of a possible new customer. Current ratio, non-current asset, trade payables, trade receivable. Which ratios would help Raj decide whether or not to supply the goods? I think current ratio and trade receivable turnover. 1 and 4. No. Raj is a supplier of goods. Uh, okay. Uh, he has calculated the following ratio from the statement of possible new customer. So if we are looking at the records of new customer, what we have to will see current ratio and trade payables turnover of the new customer. So we'll get the answer B. From the customer of Raj point of view. Okay. The following information is available for a business for the year ended 31st December. Revenue purchases owing to credit suppliers owed to credit customers. 90% of the revenue is from trade sale, 80% of purchases are on trade, which is the trade payable turnover. Okay. Here what we have to do, we have to take out the how much is the amount of credit purchases? 600,000. 600,000 multiply by 80%. 480,000 is credit purchases. Okay. 480,000. Okay. 480,000. Now, how to calculate the payable turnover? Owed to credit suppliers 46 divided by 480,000 multiply by 365 is the formula. Okay. 46 multiply by 365 divided by 480,000. Uh, uh, 480,000 purchases owing to 46. Am I making a mistake in the formula? No, no, no. Uh, sorry, oh, sorry, 46,000. 46,000 multiplied by 365 divided by 480,000. That would make 34.9 means 35 days. What I was making mistake is this is 46,000. Yes. 34.9 means 35 days is the answer. Okay. Let's draw. 35 days. C option is the answer. Okay. The table shows information for a company, financial statement, revenue, gross profit, profit from operations, profit for the year, current assets, non-current liabilities. Okay. Now, first of all, how to calculate capital employed? Getting my point there. How to calculate capital employed? So, capital employed, what is the formula of capital employed? Capital employed means uh, working capital plus non-current liabilities. Okay. So, what is the amount of working capital? We have non-current assets 59,000, current liabilities 40. Nine, yeah, non-current asset 59, uh, 59, current asset 50 minus current liabilities 40. Uh, no, that is non-current assets. Sorry, working capital plus non-current assets. Non-current assets. Okay, non-current assets plus non-current assets. Okay, non-current asset is 59, current assets is 50, current liabilities 40. The answer is 69. $69,000 is capital employed. Done? Okay. And profit from operation is $11,000. $11,000. So 11,000 divided by 69,000 percentage is 15.9. Yes, D option is the answer. Okay. 23. A company incurs a semi-variable cost per employee hours work. If hour work 10,000, an extra fixed administrative cost of $600 is incurred. Hours work 8,000 and 10,000, administrative cost 20,000, 24,000. What we have to do if we take out the difference here and here, what will happen? 8,000 minus 10,000 means there's a difference of 2,000 units, and here difference is 4,000. So 4,000 divided by 2,000 means $2 is the fixed cost per unit. Okay. So if we are making 10,000 units, means fixed cost is $2 is a fixed cost, and at the rate of $2, we have to calculate fixed cost. Okay. Uh, oh, sorry. I'm sorry. This is the variable cost, $2. So it means 20,000 is the variable cost. Okay. And 4,000 is the fixed cost. 20,000 plus 4,000 plus we have to add that 600. Okay. That means 24,600. 24,600 is the answer, I think. Okay. 24. That makes 4, 2. Okay. Sorry. We have made 12,000. Yeah, क्या कर रहा हूँ? Oh, sorry. Here we have to use 12,000. So that means our cost is 24,000 variable cost. क्या हो गया आज मुझे? Okay. So 24,000 plus 4,000 plus 600. 28,600 is the answer. Yes. Okay. Now come to 24. Which costs are charged to individual job in a job order costing system? Direct material, direct labor. Yeah, this is B option should be the answer. Individual cost wala. Yes. In job order costing, where we charge direct labor, direct material, and production overhead to individual job. So B option is the answer. Okay. 25. Okay. Now, a business absorbs overhead on the basis of direct labor hours. So budgeted overheads is $620,000 divided by budgeted labor hours 12,400. That makes our rate uh, budgeted rate $50. So if labor has worked for 13,100, our uh, overhead will be 655,000. Okay, absorb overhead is 655,000, but actual overhead is 640,000. That means 15,000 over absorbed. A option is the answer. Okay. Now come to 20. थोड़ा सा ऊपर हो गया, थोड़ा सा ऊपर करते हैं इसको. हाँ. Why might a business use absorption costing to calculate inventory valuation of financial statement, to calculate selling price by adding profit to total cost, uh, to include all production costs for the units produced? You say all three statements are correct, so A should be the answer. 27. Gareth makes and sell bread. He has calculated how many loaves he needs to sell each day in order to break even. Which factor helps him accurately analyze his break even points? All of his production is sold on the day it is made. Yes. If he has sold everything he has made every day, that would be very much helpful in calculating break even points. So A option should be the answer. A business is following information about a type of product. Okay. 28. Okay. See, current production 8,000 units, unit selling price $20, variable cost $12, fixed cost 25. What will happen to break even point and the margin of safety if fixed cost increase to 32,000? See, $20 is the selling price minus variable cost 20, contribution is 8. If we are dividing uh, 25,000 fixed cost divided by 8 contribution, it was 3,125 was our break even. Currently break even 3,125 units. Okay, 3,125. But if it is increased to 32,000 divided by 8 contribution, 4,000 would be our break even. So break even is going to be increased by 875. Is increased by 8. So it means our margin of safety is decreased by 875. If so, remember whenever uh, break even is increases, margin of safety is going to be decreased. Okay, 29. 29. Okay, question number 29. What we have to do? Okay, we have to calculate contribution per unit here. Contribution of each and every item. So add text. Uh-oh. Every time I make a mistake. So what would be the contribution here? Product X. Selling price is 100. Okay. Selling price is 100. Selling price is 100 minus direct material cost 40 minus direct labor cost 20 minus 15. So that means uh, contribution is 25. Okay. So what about this 120 minus 45 minus 25.5 minus 18. 31.5 is contribution. 31.5. Okay. So what about here? 130. Okay. 130 minus 48 minus 29 minus 20. That makes 33. That makes 33. Okay. Which factor? Material is short. So if we divide material by contribution, 40 divided by 25%, 160% here. This is 160%. Okay. What about this one? If we uh, if we divide 45 direct material, 45 divided by 31.5%, answer is 142%, 142.8, 142%. Okay. And if we divide here, what was the amount? 32? 33. Okay. 33, 48 divided by 33%, 145. 145%. So it means which is the lowest percentage? 142. So product Y should be made first, then product Z, and then product X. First is Y, then Z, lower percentage. Okay? First Y, then Z, then X. So B option should be the answer. Okay, the lowest percentage will be produced first. Okay, okay. The last one, why would a business use CVP analysis? To act as a basis for long-term planning, to assist in the valuation of inventory, to decide which costs are fixed and which are variable, to understand the relationship sales volume and profit. Yes, this is the answer. To understand the relationship between sales, volume, and profit. Okay, so that's all for today. So, inshallah, we will discuss AS level paper 2, inshallah, in our next video next week, inshallah. Take care. Allah Hafiz.